Okay, we're recording. Hey, good morning, everyone. How y'all doing? Josh Null here with Gulf Coast Financial Advisors. We're coming to you again for our what appears to be kind of a bi-weekly update on Lower Alabama real estate, both from the buying and selling side of real estate and also from the investment side and the rental market. If you are, for those of y'all that have been watching these videos that may or not be familiar with Baldwin County, or you're using these videos as a way to get familiar with Baldwin County and Lower Alabama, we reside in one of the fastest growing counties, not only in Alabama, but literally in the United States. So one of the reasons that Brian Harris and I do these webinars is the fact that there's a lot of eyeballs and a lot of attention paid to the real estate in this area, particularly real estate that's along our 30 plus miles of beaches down in Gulf Shores and Orange Beach, where Brian specializes in. So joining me as always is Brian Harris. He is the seat broker and CEO of Harris Vacation Rentals and Harris Realty Group. Brian, how you doing?
We are good.
Very good. Well, what we're going to touch on, Brian, before I turn it over to you, I know we're going to get an update on the Alabama real estate market. And for those of y'all just joining us, or some of y'all that are rejoining from past webinars, he always brings fantastic stats. They're very detailed, but also very easy to understand, really paint a picture of what's going on. We're also going to update the vacation rental market. That's a huge issue for anybody that owns property, especially rental property along Alabama's Gulf Coast. And then we're gonna go through some action items both on the buyer side and the seller side. So with all that said,
Sure.
That's what we're gonna be hearing on this webinar. Without further ado, I'm gonna turn it over to Mr. Brian Harris.
Thank you, Josh. And we are going to have two main, and I'm going to, am I sharing the screen yet?
No, sir, not yet.
All right, I'm going to go ahead and do that, and we'll get set up here. So we're going to talk about two main segments. One, the first, we're going to focus on the real estate landscape, what we're seeing there, what the numbers are telling us, and we'll kind of compare that to what we've seen, these past few weeks. We've been making these updates, and things are changing, very rapidly. The next chapter, the next phase, we're going to talk about the vacation rental market specifically and what we're seeing there, and that's also changing very rapidly. The biggest thing there is just the massive amount of booking demand that we've had, and we'll get into all that in a little bit later. But we'll start. I am Brian Harris with Harris Vacation Rentals and Harris Realty Group. We're a full-service real estate brokerage down here based in Gulf Shores. Our main customer base is vacation home buyers and investors in these vacation properties. We also manage about 120 properties, and we're a very, high-level luxury kind of boutique setup management company. We take a lot of pride in the amount of service that we provide to our owners and our guests. We're kind of in that we don't want to get too big, so we really focus on making sure we have very luxury properties on our portfolio. On the real estate side, like I said, most of our clients are second home buyers, investors, but we also do a good bit of primary home, especially people moving into the area. Josh, as you indicated, we're one of the fastest growing counties in the whole United States. So we have a lot of incoming traffic on the real estate side. So we certainly can help you with any of those items. What we wanted to do today, just an overview, we're going to talk about the real estate market, what we're seeing there, how it's changing. Huge rental, when we talk about the rental market, huge booking demand. And we'll talk about how the trends are changing. And I kind of put changing again. For the last, if you've kind of watched us the last few weeks, we've been talking about some really drastic changes. Now they're kind of pivoting off of that change. They're kind of changing again. And then there's key metrics for 2020. A lot of really good news to share on that side. And then we have sort of action items. If you're a vacation home owner, if you're trying to sell, and then I didn't put it here, but investors as well, we'll talk through. So let's jump right into the current real estate market. This is new listings, and this is the trend week over week. And you can see the first week that we have here is this last week of March, kind of rolling into April. And Josh and I were actually over lunch yesterday, remembering how much has changed on these updates and on these reports. But you can see new listings have increased steadily, kind of trending up, peaking there that first week of May, a couple weeks ago, but seeing a strong upward trend of new listings. Not all that different than we would see in a normal, kind of April, May, as we kind of roll into the traditional selling season of real estate. So that's good to see. Closed transactions. So closed transactions, we saw a little bit of a dip down. We had a steady increase, but we saw a little bit of a dip down, and then now we're kind of back up. And what I'm thinking that little dip is probably just the 4 to 6, 8 week effects of that COVID shock that kind of happened mid-March for the whole nation, and that shock probably disrupted things going pending about that time. And we can look at the next slide, and the pending under contract was very, very small in that first week that we did this, that last week of March, first week of April. And that's probably kind of bearing out over here in this early mid-May section of closings, because they're always kind of 4 or 6 weeks behind. So I think that's probably an indication of where that market is. Beyond those first couple of weeks, where I think that was a little bit of a shock to the system, on the pending side, we're talking about pending going under contract here, starting that journey toward closing. This graph, we're seeing really just strong trend, up and to the right, based on a lot of properties going pending, week after week after week. So we're seeing really, really strong trend up, but really strong week over week pending under contract transactions in May, which is very typical. It's very typical for the real estate market to get hot, things to go pending when you get to May. So that's it feels like it's starting to normalize a little bit. And I think that's good. We've talked about in the past couple of weeks, past couple of episodes, if you'll say that, that we've seen price reductions, and we've seen buyers there to make those reductions go pending. And we're still seeing that. And we're seeing, I think, a more normal market on the real estate side. Another reason I think it's more normalized now is this chart. We're looking at price changes. Okay. So we didn't have much movement at all. I keep pointing with my pen, but I need to point with my cursor. We didn't have much movement at all right here these first few weeks that we were doing this. And then we had this huge spike. And I think this spike was about 4 weeks after this all kind of hit, so we're kind of mid-April right here. And I think people kind of had a chance to digest. They said, hey, we have a listing. We want to move that price down, get it under contract. And we've seen the market be more aggressive, but maybe not quite as aggressive as we saw it, mid-April. So mid-late May, we're a little bit less aggressive in the market based on price changes than we were mid-April. But we're still seeing buyers in the market. Back on this slide, properties going under contract or pending. So I think that's a good sign. I think it's a stabilization of the market. I think that what these numbers are telling us, when you compare these, and these are all coastal numbers. We're talking about, Gulf Shores, Orange Beach, Gulf Coast. We're not talking about Greater Baldwin County, Foley, Robertsdale, the Eastern Shore, Spanish Fort, Daphne, Fairhope. We're not talking about those markets. We might dig into those markets later on, but right now we're all on the coast, looking at the coastal market. And I think a lot of this is the huge demand in rentals that we're seeing has basically calmed the nerves of the sellers in the market. For a period there, we didn't know if we were going to have any income for all of the summer. Now it looks like we're going to have a very normal summer. If trends continue on the health front, we're probably going to have a very normal summer. So that's good. And I think that's calming the nerves of sellers. All right. So just to summarize the real estate side, I still would call this an aggressive market. That's the phrase we've kind of been using, but I think it's starting to moderate a little bit. I think it's getting a little bit more, leaning toward a neutral type market instead of an aggressive market. Pending listings going under contract, continuing to be very, very strong. We saw that, play out. I think that's a lot buyer fueled. I think that, if it was seller fueled, we would see a lot more price, an increase in price reductions fueling that market. I think this is more fueled by the demand side. I think that's being helped by people looking to get in. They've been looking for a reason to get in, and this is it. I think that it also is looking at interest rates and availability of credit, and the Fed's done a lot to try to push money into that market, so it's easy to get financed and make these deals happen. So I think that's why we're seeing a little bit of, continuing strong. Josh, do you have a question?
I did. I think that if anyone would go back to our original webinar that we did in late March, I've got a couple points there. It was really kind of prescient how you said that if we start seeing price adjustments, that's probably going to happen. And if we'll see the pendings kind of match those price adjustments activity, that's going to be an indication that the market is adjusting properly, and that'll be a quicker way for us to get into a normalized market. And I think that's exactly what the numbers have played out. On a further note on that, I think that just as in my world as a financial planner, wealth manager, you saw some people kind of on the sidelines, waiting for what they felt was a little bit more, let's say potential discount, or at least maybe where they felt like they were getting more bang for their buck, especially the people that had cash parked on the side. Because quite honestly, on many of my wealth clients, when the market is bumping along at all-time highs, some of them are kind of hanging tight to see if there's going to be a correction for maybe a little potentially buy a long-term discount, right? You never know when you're going to buy at the absolute bottom, but you try to kind of eyeball that. The point of that is, Brian, my question to you is, I think you're seeing the price adjustments happen. You're seeing the market absorb that. You saw the pendings, and now the contracts follow that. But it also looks like now, while the price adjustments have normalized, still looks like you've got pretty strong pendings and pretty strong closings. Do you think some people made the decision to come and start taking a look, or were looking on the sidelines already, and once they decide jump in anyway?
Yeah, I think you've got a little bit of both. I think you've got people that maybe, and we'll see this in our clients. They may look at things for 12 months, 6 months, 12 months, 24 months before they find that right property, or before it's right for them to move down here. Maybe they're retiring. Maybe this is an investment. Maybe this is a vacation home. But we encourage them to kind of learn the market, learn what you like, what you don't like, learn what's a deal, what's not a deal, that sort of thing. And I think a lot of people were probably in that, hey, we're looking, but we're not ready yet. And they went ahead and pulled the trigger. The financing got a little bit better. They saw maybe a price reduction on a property they've been kind of looking at, and they went ahead and made that happen. What we were bracing for was just a catastrophic, crater of the real estate market. That hasn't happened. And I think that's the main message that I want to get out to people, is that if you're looking to buy, it's a good market to buy. If you need to sell or want to sell, it's a good market to sell. There are buyers out here looking for properties to purchase. So you can, the market is healthy, and you can move a property if you want to. And I think that's the biggest thing. Because we couldn't say that 5 weeks ago, 6 weeks ago. We didn't know. But the data is telling us that we have a healthy market, and we can, make transactions happen. New listings increasing, but at what I would say a more normal pace. So kind of moving back over here to the summary. Closed transactions, like we talked about, we're kind of seeing the 4 to 6 week trailing indicator of what we saw kind of mid to late March, early April. Very low pendings at that point pushed closings to be lower, 6 weeks out, which is what would be typical. And then we've seen them bounce back up, which is nice to kind of see that bounce back up, because that tells you not only is the market healthy, making the property go pending, but the market's healthy where we're actually getting to close these transactions. Deals aren't falling through because of financing. Buyers aren't getting super afraid and backing out for whatever reason. We're seeing properties continue on and go to closing table and close. So that's good. So action items, we talked about this a little bit last time. If you have ever had the thought of maybe upgrading your vacation home or investment property, this is something that I'm actually doing right now. Doing a 1031, selling what you have. We've got a client that's had a property on our program for probably going on 5 years. And she said, it's time for me to find, maybe one step up. Interest rates are low. I'm paying about the same. I've had some appreciation on this property. I can sell it and buy the next one. So an upgrade possibility is certainly in the market. As far as buyers and investors, I think right now, more than ever, you need to be ready to go. Get your financing ready, get connected. We can certainly help with that part. We don't do financing, but we can connect you with some of the best financial people on the island here and make sure that you're ready once you find the right place, because things are going to go quickly. If it's a good deal, it's going to go quickly. That's what we're seeing right now. It's still an aggressive market. You can't just sit on things.
Well, I think what we see, Brian, and we've seen on my side as well, is surprising amount of liquidity. Real estate in and of itself is not a liquid asset by any stretch, right? But I think there was a certain segment, and to be fair, maybe even us to a certain degree, where we thought, man, we may end up with more sellers than buyers. And
right,
thankfully that hasn't happened. And so I think what we're absolutely seeing is, again, I hesitate to use the word liquidity when it comes to real estate. Real estate in and of itself is not considered a liquid asset.
Sure.
However,
relatively speaking, we're in a liquid environment.
We've got the wheels greased, right?
Yeah. No, you're exactly right. And that's a huge differentiating point from the, mid 2000s recession, where there was no liquidity. You literally couldn't find people to come buy these vacation properties. And you follow that with the oil spill and, but right now we're seeing liquidity in the market, relatively speaking. Like you said, it's not a stock that you can sell, this afternoon. But if you want to sell your property, if you want to upgrade your property, if you want to buy a property, all those things are happening. And back in the Great Recession, you might see a deal, want to go buy it, but you couldn't get financing. You couldn't make that deal happen. So we're not seeing that. We're seeing a healthy market right here. Action items, sellers and distressed sellers. I think the biggest thing that I want sellers or people that are feeling pressure, maybe there was a furlough or a layoff, 2-income family is now 1-income family. The vacation property isn't, kind of in the cards right now. That's okay. There are buyers here. Okay. That's what the message I want to get to people is that if you need to sell, you can sell, and you don't have to give properties away. You can, if you find a good agent that can market that property, you can probably do really well selling the property, even if you need to sell it. Obviously, the more distressed, the more aggressive you want to be on price, but we can certainly help with that if anybody needs that service. So want to go from real estate to vacation rentals now. And this graph, I want to kind of prep this slide a little bit. If you see these two bars and you see these numbers, I don't think you get the true picture of what they're telling you unless you understand January of 2020. And we're talking about vacation rental bookings. So bookings made in a certain month. Okay. It could be for June or July or whenever, but they booked it in January. Okay. And we see this January be our strongest booking month every single year. And it's typical for our market. People get together at the holidays. They decide they're going to go to Gulf Shores. Somebody gets, elected to be the one that makes the reservation. They go and they book it in January. It's always our biggest month. January of 2020 was the first month we ever hit $1 million in booking reservation sales. Okay. So, we were having celebration. We were, having champagne here at the office. It was, monumental. We crossed the $1 million mark. So I want to preface the May 2020 number with how big of a deal it was for us to cross 1 million in January. And we're at 1.6 million, and we've got 4 days to go. This was this morning that I put that number on there. We've still got 4 days to book, and we're 60% ahead of where our best month ever. So when I say there's huge booking demand, it's just off the chart. Never seen anything like it. Hiring staff, bringing people back that had worked with us before just to answer the phone. It's just really been phenomenal. And I want to, take a second, and this is a little bit maybe selfish, but I want to take a second and just say thank you to the Harris team, the reservation side, the guest services side, the cleaning side, inspections. We do pre-arrival inspections and disinfectants for all of our properties. I want to thank everybody on the team just for making this all happen, because these numbers don't just happen. You have to answer the phone. You have to have those questions answered. You have to make those bookings. You have to get people in properties, and all that's been very difficult. And we went from a roller coaster of prepping for spring break to not knowing if any of us are going to have jobs to right back up into, super peak season overnight. So it's just been a wild ride, but here we are, and we're making just some incredible bookings. So huge booking demand is really the headline of the vacation side of the presentation. And that's why I wanted to kind of start with it. And we'll see it, we'll dig more into it, but we're seeing it, now kind of go throughout the peak summer. So this is the current vacation rental market. This is unit revenue on our program. And I think the biggest thing here is that unit revenue year over year, pacing wise, okay, is we are now in 2020, even with COVID and all of what it's done, we are above pace from where we were in 2019. So we've actually got more booked revenue on the books, gonna be fulfilled now than we did this time last year. So our pacing is ahead on the nightly rent unit revenue standpoint. Every month is ahead, and I thought this was actually kind of shocked me. Every month is ahead across the whole year except March and April. And I think that just shows you, one, how strong the vacation rental market was before COVID, and how strongly it's bounced back, now that really for all intents and purposes, post-COVID, if of course we maintain the health trends that we're seeing currently. We obviously have to maintain that, but we're seeing this kind of be a post-COVID environment for the vacation rentals. And you can see on this slide the March and April decline, and then the ramp up for the rest of the year. So I thought that was very, very interesting. So taking this being the whole year, and obviously we have a huge bump for summer. I went back. So now we're looking at the rental market. This is Baldwin County, Escambia, and Perdido Key. This is paid occupancy for the month of May. Okay, so this is just May alone. And you can see from May 1st to where we currently are, where we're 27th, here at the very back side, and we'll probably fill a lot of that in. We've seen a huge increase in unit revenue, up 25%. Occupancy is up 13% from last year. Even with that really, really slow start, that first kind of week of May, where they had just turned the beaches back on. daily rate. So the daily rate that we charge per night is up 17%. And RevPAR, which is a whole nother presentation about where we get RevPAR, but basically it's an average of the daily rate and the properties that we have available to rent, is up 32%. So just everything is showing very, very positive signs, even with the first, 5 or 6 days kind of being, a non-event. Another thing that you see here, take one quick second. Another thing you see here on this graph, the solid line, which is kind of shaded underneath, is our current year. And the dotted line that you kind of see in the background there is the trend from last year. So last year you saw a much heavier trend weekend to weekday, weekend to weekday. And now you're seeing almost a steady, arc, a steady trend line with higher reservations as we get into the back half of May. And what's happening is that the traditional inhibitors or restrictors of vacation travel have been removed. School schedules, work schedules. I'm a little league coach. I was coaching Ava's soccer team back before all this happened. We actually only got to play one game, but little league baseball, sporting schedules that tie parents to a certain area close to home have for the most part been canceled. So all these traditional inhibitors or restrictors of travel are now gone, and what we're seeing is people would rather be, especially after being cooped up for most of March and April, would rather be kind of get some sun. Basically, if you have good Wi-Fi, which we do, and we made a big investment in our Wi-Fi just as a company for these properties, you can basically work from anywhere, do school from anywhere, and we're starting to talk about what does August look like? What does September look like? What does it look like if virtual school becomes a more prevalent, alternative in the grade school, realm? So we're kind of starting to think about that, as we have our revenue meetings weekly and start planning for our August and fall. What does that school schedule look like? So I think that'll have a big impact on when people are coming. Okay, so this slide, I want to talk about what I'm calling a normalization of the booking pattern, okay? And if you can, don't focus on this slide right here until we talk about this one. All right, so this slide shows people that have made a booking May 2nd to 14th. Okay, so early in the month, the first 13, 14 days of the month. And where did their check-in date fall? Okay, so they booked early May, early or first half of May, and where did their check-in date fall along the annual calendar? And you can see here on this graph that we had what we're calling last minute or ultra last minute. Traditionally last minute vacation bookings for us are like the month of, 30 days out, 21 days out. But we were seeing reservations come in for tonight, tomorrow. What do you have for this weekend? And you can see that we just had super, super aggressive last minute bookings, and that kind of tapered off to kind of nothing. And we'll talk about that little spike in August here in a second, that 25 right there. But let's move now to that other slide right over here. So now we're talking about bookings that have happened in the past 7 days, okay? So in the past 7 days, not early May, but the past 7 days, so the 21st, the 28th, we're seeing what I'm calling a normalization of the booking pattern, okay? We're not seeing as much last minute. These are the same two graphs, just different dates of when the data was pulled. And now we're seeing properties filling in across all of peak summer, okay? So whereas we had at the beginning of May, it was ultra last minute. People are just coming down for May. Now we're seeing people come and book in a more traditional, standardized, stabilized pattern. And we're seeing that play out in the check-ins right here. Just going back real quick on this little spike here, this is the first week of August. And I just want to take a second to commend Rachel and Elizabeth and their team. Rachel's our revenue manager, and she saw a dip in the first week of August in our occupancy, even this far out, even with all this going on. She saw, hey, we've got this little dip. And we adjusted some pricing, we adjusted some restrictions on nightly minimums, and we're doing all this to make more revenue for high, even at the beginning of May for that time in August. And that's really led the charge. And you can see that again with those strategy adjustments is still booking really, really well. So that's a really good indicator. Great job, Rachel. Great job, Elizabeth, and your booking team on that. And that's one of the things that we do just as a company to produce as much revenue as we can for our owners. We're always looking. We have that revenue manager, Rachel, looking out, making sure that we're in front of trends and leading the market in our area. Okay, so current vacation rental market update. This is the same slide that we had from 2 weeks ago, May 14th. So 2 weeks ago, we saw what we called the COVID dip, right? So we saw March fall off. We saw April fall way, way off. Market went down to 3%. We were at 23%. And then boomerang back up in May. Okay, so we're, this blue line is Harris Vacation Rentals. This orange line is the Gulf Shores and Orange Beach market, okay, Baldwin County market. So you can see that we rebounded really quickly. And we've got 68%, 58%, and 53%. Again, seeing that trend of ultra last minute bookings filling in occupancy from May. Okay. So what happened in the last 2 weeks? All right. So if we see what happened in the last 2 weeks, we've seen occupancy go up. Okay. 68% for May, now 74% for May. 58% for June, now 77% for June. 53% for July, now 68%, have to squint, for July. So we're seeing two things. One, we're seeing the calendars fill in very nicely, but we're also seeing what we talked about, that normalization of the booking, where we're not just ultra last minute, just May. We've got this kind of spike, but we've got more of a curve, which is what we typically see. And we've even got people booking out, August, September, October, which I think is a great sign, because people are starting to plan beyond this current situation, and trust that things are going to be okay. There's market confidence, consumer confidence. Not that we're the consumer confidence index, but this is showing you that people are willing to book, 4 or 5 months out for a vacation to get the spot that they want. So again, incredible market rebound, a lot of pent-up demand for leisure travel, and a removal of the traditional restrictions to travel. And we've seen really just everything explode down here on the sales side. So kind of to wrap everything up, for the vacation, we're seeing just huge demand for bookings. We're seeing bookings normalize. We're getting away from the ultra last minute being the only thing people are thinking about. We're seeing a more normal booking pattern. I'm calling the rental market normal plus. Okay, we're seeing a normalized booking setup. So I'm getting a call. One of the bad things about using your iPhone for your camera. So normal plus on the booking side, on the reservation side. Alabama beaches are rebounding strongly. Florida beaches, I don't have as much information about those, but I think they are rebounding very strongly. They are now open, which, we are happy for them to be open. I've got a lot of friends that do the same thing I'm doing. They just do it across the state line, and they've surely been hurting. We're glad that y'all are open. We're glad that y'all are back to business. Action items. If you've got a rental, and I want to talk real quickly about condos in a second. If you've got a rental on any program or you're running it yourself, you need to make sure that you're keeping pace with the market. If you're not seeing the same numbers that we're seeing, then you've got to be the squeaky wheel. You've got to call, you've got to say, what am I doing wrong? What do we need to do to make this better? Or maybe it's time to consider, maybe there's an alternative to doing it myself. Maybe there's an alternative to my current, management situation. Maybe I could be in a better location. And we're certainly open to having those conversations if you think Harris can help you with your investment. That's why we're here to help you. So I think those are the action items. Summary, really, well, let's hold the summary for a second. Let's talk about condos versus houses. And maybe next time we meet, we can do a little bit more in depth on condos versus houses. But what we're seeing is the houses, and this is kind of what we've been predicting. The houses have rebounded quicker than the condos. And it really is just, basic level common sense that a single family home where I can take my, self-quarantining family and drop them off in the parking lot of this home and not touch anybody else or be around anybody else or be in a crowded lobby or use a common elevator, that's preferable to booking a condo tower where I've got to, park in the parking deck and go into the lobby and go into the, the elevator. I think that the condos as a whole are doing a good job. The associations are doing a good job cleaning and sanitizing those common areas. We know that we're doing a disinfectant and a very, very thorough cleaning with upgraded disinfectants to cope with turning a property over, making it healthy and safe for a new family to come in. So we know we're doing what we need to do there, but I think that just the psyche of traveler is, avoiding those if I can get, a single family home. So that is a difference that we're seeing in our portfolio. So now just for the summary, rentals rebounded harder and faster than I was predicting. It goes beyond what I thought would happen. We've blown through all of our sales goals this month. We've set another sales goal that was even beyond, so far out there, I thought, okay, we'll never hit that one. And we hit that one and we just keep going. So we've been, obviously working very hard, but very excited about what production we've had. But rentals have rebounded drastically. Revenue from vacation rentals will be similar to 2019 numbers if health trends continue. And I think that's the big asterisk on all these predictions. If health trends continue, we're going to see this be a very normal, year. We were bracing for, I was telling my owners, brace for 50% of your revenue and hope for better. And I think that we're getting that hope for better, reality if we can maintain the health trend. Josh, did you have something before we wrapped up?
I did. And I don't know if you're able to keep, I know you keep a lot of statistics on your, for your landlords.
My pocket. Yeah.
Is there any stat that tells you how many people coming into our area are discovering Orange Beach and Gulf Shores potentially for the first time?
I'll probably, we use a key data dashboard, which I feel like is the industry standard for, data analytics. For a lot of the graphs you see, and I just say thank you, Jason. Thank you, Amy, for doing all this on key data. Y'all have done a great job with that tool. So we use it a lot and it helps us tremendously. I think that there would be a way to start to dig into that a little bit on the data side. I know from just kind of hearing the word on the street, if you can say that. We are seeing a lot of people that traditionally are Florida, Florida Panhandle, Destin, Panama City, that sort of, range, Pensacola, with them being canceled for probably about, 3 weeks or so where we were open. We got a lot of influx of travelers from those that were traditionally going to Florida markets. And I think that's going to bode well for the Alabama coast on a couple of different ways. I think it's going to expose a lot of people to the value that we have here, the gorgeous beaches that we have here, the great water that we have here, the restaurants, the little bit scaled back on the traffic side, or a lot scaled back on the traffic side from some of those, locations. So I think a lot of people that have been traditional Florida bound have now come here and seen it, and now see there's a lot of value here. So I think that we will see that.
Well, and two, I think it's pertinent to say, when you see certain news media portray our beaches as, looking like spring break 2018 all over again, take all that with a grain of salt. Even though we ran all through all this and we've seen you've obviously been a wonderful increase in people coming down here. As you and I are both heavy users of the Gulf Coast. I take my boat out almost every weekend. I know you've got a place down there, and I'm not going to sit here and tell somebody that there aren't people down there, right? But it's not. You always want to give people have the proper perspective on all this. Coming down here with the rental market and the traffic and the crowds, you cannot compare it to the Atlantic coast, the Eastern Shore, Eastern coast. I'd say maybe not even compare it to some of the things you've seen out of California. It's just a little bit different environment. And, people at least everything I've seen, and I've been down there almost every single weekend for the last several weeks. Everybody's keeping great distance. There's plenty of room to move. Yeah. You don't feel like you're on top of each other by any sense. Like you mentioned earlier, you're seeing a lot of family units kind of setting up base camp.
I think that one thing that really is an advantage for the vacation rental as opposed to the hotel industry is that you are equipped to basically, if you want to. We were down there in Fort Morgan at Barefoot a few weeks ago. I actually did this interview from Barefoot, kind of looking out the window. We went, I think it was 4 nights. We did Walmart grocery pickup. We had a menu for each, dinner each night. We cooked at the house. We literally didn't go anywhere. We didn't go back to Walmart. We didn't go to the store. We got all our stuff. We went, we camped out at the house. We made our meals. It's just a really easy, situation. It's a safe situation. The beaches in Gulf Shores and Orange Beach, comparatively to some other markets, are low density. Fort Morgan is about as low density of a beach as you can get anywhere.
That looks like it looks, no doubt.
Yeah. No. So, very, very safe, very easy to social distance and maintain those spaces. So that's been helping our market for sure.
All right. I got a couple other things. You and I have alluded a handful of times to our previous webinars. One of the quickest ways, if you all want to go back and see the progression of the information, is on my YouTube channel, Gulf Coast Financial Advisors on YouTube, or just Google YouTube my name, Josh Null, and you'll find these videos here. And it's really, for someone that is either already in this market and wanting to learn more, or somebody that is considering getting into this market on the investment side, buying, selling, whatever it may be, I think it's a real master's class in boots on the ground, finger on the pulse, what is actually going on down here, as opposed to getting information from someone that is not right in the middle of what is actually going on and has the hard stats to back it up. So kudos to you on that, Brian.
Awesome. Thank you.
So
we've been happy to do it and happy to kind of get the message out, like you said, with the local insight and accurate data on our side.
All right, as I'm going to let you close. I've got a couple things to say in closing. While we're doing that, if you all have any questions, this is live. Feel free to hit me up in the Q&A or the chat. Brian and I will answer that if you have anything you'd like to ask. Brian, before I do my disclosure and a couple other notes, do you have anything you'd like to add?
I think the summary really is that we have a fast moving, I think maybe we're stepping down a little bit from aggressive, but a fast moving real estate market. It's healthy. We have sellers, we have buyers. We're seeing an explosion in vacation rental demand. And I think that's probably calming the nerves of a lot of sellers on the real estate sales side, just because there is revenue coming in. And we're seeing, rates be very stable. We're not having to discount too much. So that's, a very healthy real estate sales market, an extremely healthy, kind of bursting at the seams vacation market. So we're seeing good things on both sides.
Agreed. And then just a couple notes here on my side, Brian. We want the viewers of this, because obviously we record this, it has a second life, and the folks that are viewing now, you and I are not affiliated. We have two completely separate companies.
Mm-hmm.
However, that being said, we do, if you have someone, especially as we've said on previous webinars, the majority of my clients down here on the Gulf Coast typically have some of their portfolio in real estate. And I think having, someone like you in the network where we can actually sit there and have a conversation and see how all the pieces fit together, that's pretty valuable. So
Absolutely.
Make sure that we throw that out there. Even though our companies are affiliated, that doesn't mean we're not able to work on the same team. So
Absolutely.
Yep. And with that, and as you all know, Josh Noll, Gulf Coast Financial Advisors, I'm a financial planner. I'm located here in downtown Fairhope. As with anything that I produce, I need to include a disclosure. So if you'll pardon me here 1 second. Advisory services offered through Prime Capital Investment Advisors, a federally registered investment advisor. The preceding commentary and responses are the opinions of myself, Josh Noll, and Brian Harris, and are not necessarily the opinions of Prime Capital. They are for informational and educational purposes only, and are not and should not be considered investment advice. Past performance is no guarantee of future results. No guarantees expressed or implied. So I think on that note, Brian, we'll just keep monitoring this, finger on the pulse. I think if this is great information for both your clients that are already with you. I think this really gives them some hard data to
Absolutely.
make their decisions on. And I think it's great information for anybody that's considering doing something down here on the Gulf Coast, as
Sure.
not only Panhandle, Florida folks have discovered, as people from all across the United States are
Absolutely.
our area down here. So that's it, man. Another fantastic job.
All right. Thanks, Josh.
All right.
Thanks, everybody.
Thank you all for joined us, and we will see you again.